Well, it looks like the room is filling up and we are 3 minutes past the hour, so I think we're going to get started.
Okay.
Sounds great. Okay. My name is Shelby Schneider. I'd like to welcome you to the Payroll Protection Flexibility Act update, as well as our loan forgiveness webinar. I know that this is top of mind for many businesses throughout Saratoga County and also the United States. So we are here today with our featured panelists, Steve Bulger from the U.S. Small Business Administration, Michael O'Connell from Adirondack Trust Company, as well as Kevin Hedley, CPA from Hedley and Company. Again, I'd like to introduce myself. I am one of your moderators today. I'm Shelby Schneider. I'm the president of the Saratoga County Prosperity Partnership. And I'm also joined by Mary Estelle Reichman, who is our advisor for business retention and expansion, as well as our global markets program. Thank you all for attending. And I'm going to just give you a quick overview. Before we do that, I'd like to thank our partners who we've been working very, very closely with since the beginning of the COVID pandemic to ensure that we are speaking with one voice, trying to communicate in a consistent way. We know that there's a sea of information and a sea of confusion about this unprecedented crisis, and we are all working collaboratively to ensure that we can retain the businesses that we have and provide you all with the resources that you need to get through this. So, and those partners are the Saratoga County Chamber of Commerce, the Saratoga Convention and Tourism Bureau, otherwise known as Discover Saratoga, our downtown business associations throughout Saratoga County, especially the Saratoga Downtown Business Association, our City Center Authority, who's done a tremendous job in collecting personal protection equipment kits that we have been actually sending out to businesses throughout Saratoga County. If you need one, ping us in the chat feature or call us after the call. As well as SCDC, our other partner in economic development in Saratoga County. So Michelle, can you please advance? Michelle? Thank you. So I'd like to give an introduction to our panelists today. We have Steve Bulger. He is actually from District 2 and District 3. He's a regional director at the U.S. Small Business Administration. Steve was appointed by President Trump as the regional administrator of the Atlantic region in January of 2018. And he was also appointed as the acting regional administrator of the Mid-Atlantic, so Region 3, in September of 2019. In addition to his Region 2 responsibilities, he's responsible for a field staff of more than 100 business community outreach specialists, overseeing the delivery and management of programs for the Small Business Administration. And we know that he has been really burning the midnight oil, getting the information out, and also money out on the street from the federal government on behalf of the SBA. So we're really thrilled to have Steve here today. Prior to his appointment to the SBA, Steve served Congressman Chris Gibson for 6 years as the district director. And we are lucky enough to say that he is a resident of the town of Clifton Park, as well as a member of the Saratoga County Prosperity Partnership Board of Directors. So, Steve, thank you for coming. I'm also going to introduce Michael O'Connell. He's the Executive Vice President at the Adirondack Trust Company. Michael has a 30-plus year career in investment and commercial banking, and he's been employed by the Adirondack Trust Company since 2007. So he's currently the Executive Vice President. And his primary oversight responsibilities are bank-wide lending and retail banking functions. And we know that Michael has really been on the front lines of the deployment of the payroll protection program for the Adirondack Trust Company. The really special thing about this program is, the federal government deployed SBA dollars. However, it's really a lot of the work has been done at the local level by our community banks, by our community lenders, because, their lenders, their customers, their neighbors, we're all working collaboratively to ensure that, we're securing our economy and saving the businesses on our main streets. So thank you so much, Michael. And I'd also like to introduce Kevin Hedley. Kevin Hedley is a CPA from Hedley and Company, which is based in Half Moon. He has over 30 years of tax and accounting experience with individual, small, and mid-sized businesses, as well as providing representation before the IRS and the New York State Department of Taxation and Finance. He's a frequent lecturer on topics such as taxation, business administration, as well as management. We're proud to say that Kevin is the chairman of the board of the Saratoga County Prosperity Partnership, as well as the Saratoga County Chamber of Commerce. So he's been a busy man these days. He's also a member of the American Institute of Certified Public Accountants and the New York State Society of Certified Public Accountants. So thank you so much all for having us. Michelle, would you like to advance the slide? So without further interruption, I'd like to introduce Steve Bulger, who will be giving us an update on the Payroll Protection Flexibility Act that was signed by the President on June 5th. The new legislation gives borrowers more freedom in how and when loan funds are spent while retaining the possibility of full forgiveness. So I know that there have been a lot of changes. I'm sure that we're expecting a lot of changes, but I'd like to introduce Steve. Thank you so much for coming, and the floor is yours.
Thank you, Shelby. Good morning, everybody. Shelby and Kevin from the partnership, thank you for hosting this morning. Mary as well. Appreciate that. I do want to give a shout out to my fellow panelist, Michael O'Connell. Adirondack Trust has been one of the real leaders in the Paycheck Protection Program in this part of the state. They have done a tremendous job. And as Shelby alluded to, this program, I think it's going to go down as one of the great public-private partnerships in the history of our country, to be able to get over $500 billion of very needed money into the hands of small businesses in basically a little over 2 months. And so that partnership with our lenders, and maybe there's other lenders on this call as well, it really was tremendous. They worked exceedingly hard, and I just want to publicly thank Mike. He is the head of one of the other titles that you didn't mention, which I know is true, is he kind of heads up the SBA lending portfolio at Adirondack Trust, which they are an award-winning lender year after year, SBA lender. So thanks to them. And also, Kevin, for all your great work. You've been on this since the very beginning, as we've talked. So thank you for all you're doing. So the Payroll Protection Program Flexibility Act, that was, as Shelby mentioned, that became law on June 5th. The two big changes, which most of you are probably already aware of, but just to reiterate, is that the covered period, the forgiveness period, we'll call it, extends now from, it went from 8 weeks, which was the original legislation, now out to 24 weeks. So what that means is, you now have, instead of using the Paycheck Protection Program funds in the proper way, which we'll get into, instead of having to use those within an 8-week period, you now have up to 24 weeks. So it really takes a lot of the pressure off small businesses who were feeling under the gun that I've got to spend this money, I got to do it in 8 weeks, I got to do it the right way. And now, so instead of the 2 months, you've now got out to 6 months. So basically what that means is as long as you're spending the money in the proper manner, which we'll cover, and you now have the ability to ask for forgiveness of that loan at any time within that 24-week period. So say after 12 weeks, for example, you've spent the money, you've spent at least 60% of the money on payroll and benefits and the other 40% on eligible uses, you can now go to your lender and work with them to get the forgiveness application filled out. They will then sign off on that, get it to the SBA. The SBA will sign off on that, forgive the loan to the borrower, and repay the lender the proceeds of what was lent to the borrower. So that's how it's going to work. And we feel we're very pleased that Congress and the president took this action, because we were all feeling the heat that it had to be done so quickly. So 8 weeks to 24 weeks, that's the big change. The other important change is, instead of having to spend 75% of the loan proceeds on payroll and benefits, both for your employees and yourself as the small business owner, that has been reduced to 60%. So what that does, it gives a little more flexibility to the small business owner if they want to spend more of that money on some of the other covered uses that you can use it for. That includes rent, utilities, and interest on mortgage. And we can get in, I know Kevin and Michael have good comments on that, as well as what exactly is covered under there. But so those categories, now you can spend up to 40% of the loan proceeds. But those were the two really big changes coming out of the flexibility program. There are some other changes. We will skip over that, except for if there was a safe harbor clause, which we can discuss a little bit later. If you, as a small business owner, are having a hard time hiring back employees, and we're hearing this in some cases because a lot of employees are making more money on unemployment with the extra $600 tacked on to whatever New York State is paying on unemployment. So if you were having a hard time getting back to your full-time employee equivalent status that you submitted the loan with, there is a safe harbor clause that if you can show that, prove that, that will not be held against you. That full-time employee number can be modified if you're having a hard time with that. Also, if your business has really suffered because of COVID-19 restrictions placed on it by virtually any level of government, that is another safe harbor that, if it's really impacting your business, you will be able to get relief from that 60% threshold for the forgiveness potentially. But the reality is this: you've now got up to 6 months to spend 2 months worth of payroll. And because that's essentially what the loan was based on. The calculation was 2.5 times an average monthly payroll for the business. So you've really got a lot more time now. And so we would encourage you to spend it the right way. Some companies we're seeing are spending the entire 100% of the proceeds on payroll. And I know there's questions on that. Can we do that? Yes, absolutely. And that's ideal from our perspective, because the name of the program says it all: Payroll Protection Program. It was designed for the money to go to your employees, the benefits to keep flowing to your employees and yourself as the owner. So those are the key things in the Flexibility Act. What's also changed is we've come out now with a new forgiveness, because the numbers changed in the calculations, the forgiveness calculations, we've come out with an updated forgiveness application form on our website. So your lenders will be able to help you with this as well. And certainly if you're working with your accountants, they will also be able to help you get through that. But there is now what's known as an EZ form, which not all businesses will be able to take advantage, only some. However, especially for smaller businesses, for sole proprietors, in fact, that will be an easier way to submit for forgiveness, is using that EZ form, kind of like the 1040 EZ form on the IRS. We tried to do the same thing. I'll let Michael and Kevin cover more details on the calculations, how that's all going to work, because I know they're experts on that as well, and their operations are already gearing up for that. But in general terms, that's the changes that were made to give small business owners more flexibility. In terms of the program itself, we basically only have 6 days left. Next Tuesday, June 30th at midnight, the program will stop accepting new applications. There's currently well over $100 billion still left in the program. What we've noticed really almost for the last 3 or 4 weeks is a significant fall off in the number of applications, the number of small businesses looking to take one of these loans. And the reason really is the demand has been satisfied. What we're hearing from lenders across the country is that those companies that really wanted to get a PPP loan and also eligible nonprofits, for the most part, they've gotten the loan. So we've noticed a real fall off in the applications, but there still is money left. If you are aware of a small business or eligible nonprofit that wants to take advantage of this program, and with these flexibility terms, it's easy now, then please have them get with their lender. You can find a list of lenders on the SBA.gov website, which is in this program here on the slides, to basically walk you through what you have to do. And then, of course, there's always Adirondack Trust. You can always call them too, but I'll let Michael handle that one. So with that, I just wanted to, again, thank SCPP for hosting this, and I look forward to taking questions moving forward.
Thank you. And, do you anticipate any other changes forthcoming, whether it be from the Treasury Department, who is making the rules for the program, or do you see anything coming from Congress? And I know that, nothing is official until it's official, but anything that you can offer?
We do expect to see more changes in the rules that the Treasury Department sets up in conjunction with SBA as to how especially on the forgiveness side, right? Because that's where the whole focus is really swung to now, is on the forgiveness. So we do see potential clarifications on that. No real big changes, I don't think, unless Congress were to do something. No real big changes on how the forgiveness is going to be structured, but there is going to be a lot of detailed questions. We know, I've been told this guidance is additionally forthcoming. We just got something this morning, in fact, which were some minor changes. But so I would just say, stay in touch with your lender, stay in touch with your accountants, because they're on top of this stuff. In terms of the program itself, we do think there is going to be changes beyond the June 30th deadline. With all that money still in there, and from what we're hearing from Congress and the administration, they want that money to go to small businesses who still need the help. So exactly what form that will take, we don't know. That has to be worked out in D.C. But I don't think there's much doubt that the program will likely be extended, maybe till the end of September, till the end of the year. And then there is the possibility of a round 2 of the PPP. It probably will not work the exact same way as round 1. There'll probably be some more restrictions on it. But we stand ready to implement whatever Congress, throws our way. And we'll just have to wait and see what those changes are.
Okay. Thank you so much, Steve. And thanks for all your hard work that you're doing for Main Street businesses across the United States, and especially here in Saratoga County. So, as Steve said, you're going to have questions throughout this. We're going to take a deeper dive as we talk to Michael O'Connell as well as Kevin Hedley. But as you have questions, please include them in the chat feature, and we will do our best to try to answer those. Okay? But some of those might be covered. So, Michelle, can you advance to the next slide? So now I'd like to introduce Michael O'Connell to discuss the process of applying for loan forgiveness. And, I just, on behalf of the Saratoga Partnership, and I think the Saratoga business community, I'd like to thank Adirondack Trust Company, as well as all of our SBA lenders throughout Saratoga County, for the tremendous amount of work that you've done to get this money out onto Main Street USA. So, I know that we're at the end of the 8-week period when a lot of initial you have received the flood of applications. We know that first round of money went out in less than 2 weeks, and we know that how hard our lenders worked to get this money out the door. So now we're looking at forgiveness, and this is the second wave. Can you give us some insight, Michael?
Thank you, Shelby, and good morning, everyone. So I think I'd start with, on the banking side, I think all of the banks are here to be part of the solution and to make the forgiveness side as seamless as possible. And regarding the first question, when should I apply? I would strongly encourage everyone to apply as soon as you can within that 24-week period when you have satisfied your maximum debt forgiveness. So I think that's the key, is to, keep the detailed records, but I would say you wouldn't want to wait longer than you need to. When you feel you've maximized that forgiveness, go ahead, reach out to your lender and apply. On the outside, you would need to apply within 10 months after that 24-week period. But it would be in everybody's best interest, the bank, the SBA, all of the loan applicant borrowers that are on the line, to do that earlier than later. And during that process, I think you'll find that the partnership of the banks, your accountants, if you're working with a bank with an online portal that has a digital application with prompts to help you work through that application, that would be very helpful. In terms of the documentation you need, I think everybody's seen that during this process, it's sort of changed back and forth. And what I'd like to do is just sort of lay out what I think you'll find most banks are using for the documentation, just as a reference. So you have a few different categories. One would be payroll, and how do you justify you spent the money on the payroll that you need to? And the answer would be, if you have a third-party payroll provider, I think that documentation would be the easiest. It's very detailed, and that would help with the supporting documentation. If that's not available, if you're a smaller business that does not have an independent payroll provider, then your bank statements would suffice. And in some cases where there are employee numbers that need to be documented, that can be done on a separate form. But I would go back to a third-party payroll provider, really gives all that detail, and that would be the simplest way. The other category would be employer contributions to health insurance and retirement plans. That is part of the payroll number when people applied for their authorization. And the way you would document those expenses by the business would be payment receipts, canceled checks, or account statements that would basically validate that your employer paid contributions for health insurance and retirement plans have been made. The third category would be business mortgage interest. Again, you can look at different sources to validate that. I think the easiest approach would be if you have invoices from your bank, if you have receipts that you paid that, or canceled checks. Any of those would suffice, and that would apply to mortgage interest, business rent, and business utility payments. Those really would be, when you step back and say, what are the categories I need to document? It would be those 5 areas: payroll, retirement, health insurance, and then the non-payroll items. Now, one question that we are certainly getting a lot of questions on, and I think the people on the phone would share this, is, the loan forgiveness form. What form can we use? And the SBA has rolled out with a directive that makes it simple, I think, in terms of what way you can go or not. As Steve mentioned, there is a easy form, a short form, and that form can be used in 3 different circumstances. Number 1, if you are a self-employed business and have no employees, you automatically are eligible for the easy application form. It's short, it's a lot easier to complete, and I would encourage people that fit that category to do so. The second eligibility would be if your business has not reduced salaries for their employees by more than 25%, it did not reduce the number of hours for those employees. If you meet that criteria, you can use the easy form. The last eligibility would be if you have experienced a reduction in your business activity as a result of the COVID-19 health initiatives, and you did not reduce salaries or wages of your employees by more than 25%. In those cases, you'd have restaurants, hospitality, the businesses that were affected and weren't able to bring back their employees immediately. That would help those businesses qualify. So I would summarize that part by saying the applications that are available, the long form and the easy form, they list these criteria. We're just sort of highlighting it today, what they are. And I think when we get into our Q&A, we can go back and forth on specific questions. But I would end it with saying on the common concerns, what people really are looking for is assistance in how do I apply and how do I facilitate this forgiveness in the easiest way. And I would say there's 3 ways to do that. First, when you're working with your bank, if there is a digital application, most banks have that. In the fields that need to be completed, all have prompts, and it assists you in what you need to put in. And so I would say that's very helpful. If you give that a shot, yeah, I think you'll find that that will be of great assistance. And of course, the banks are available for questions. Certainly we are at Adirondack Trust. And our accounting partners like Kevin are also here. So I think you have those 3 resources to really work through the applications, and we'd be happy to help. And I know our other banking partners are as well.
Thank you so much, Michael. And we appreciate all your effort, like I said. Now, Michelle, please advance. I'd like to move on to Kevin Hedley, who obviously is a certified public accountant. And he's going to talk about PPP forgiveness and the tax considerations that go along with this. And, you know, if you do have a financial advisor, if you do have an accountant, you know, people like Kevin are really fielding a million questions, and he's been on the front lines of this from the very beginning. So, Kevin, thanks so much for your time. And, you know, we have a ton of questions for you, so I'd like just get started.
I can see them coming in, so appreciate that. So thanks, everybody, for joining us today. I appreciate it. The first thing I want to mention, and Steve even alluded to it, what's happening here is these rules are changing very quickly. Steve had mentioned something even came in this morning. And the banks and Steve and even we in the public accounting profession, we're all working to get information to everybody as fast as possible. But things do change very quickly. So that's why even when you look at the slides, it says as of today, because this is the information we have as of, let's say, midnight last night, because anything could have changed sometime today. So always keep in tune to what's going on. So I'm going to talk about a few things that have changed recently. And there are some questions about full-time equivalents. There's actually 2 ways to do it. One is the full-time equivalent is based on a 40-hour work week. It's not based on 37 and a half or 30 or 35 hours as other things go. It's based on a 40-hour work week. So somebody works 40 hours, that's the full-time equivalent of 1. If they work less than 40 hours, you divide that number by 40 and you come up with a decimal. That'll be less than 1. You have 2 options. One, you can use that actual number. Maybe somebody works 70% of 40 hours. Well, then they're a 0.7. The other option you can even do is you can just assign everybody either a 1 or a 0.5. So that's a simplified method. So if you want to take a look, you have a couple part-time employees, you just assign them as a 0.5, and that'll help you out as well. It makes administrative a little bit easier. Another question we're getting sometimes is this strange concept, alternative payroll covered period. It is a bit of a mouthful to say it. It doesn't always make a lot of sense when you think about it. But when the act was first came on out and you got funded, your 8-week period started at the moment of funding or the next day. The alternative payroll covered period is actually going to allow you to pick one that is associated with your regular pay periods. But in order to use this, you have to use a bi-weekly or weekly payroll period. You can't be a monthly payroll and to use this. And if you want to use this alternative payroll covered and you are not at least bi-weekly, you'd actually have to switch your payroll processing time, which may be an administrative burden, may even cost you a little bit more money in payroll processing fees, but it may be worthwhile. So particularly if you're looking at going this out over 24 weeks, maybe there are 8 weeks is already past for you, but if you're looking going over 24 weeks, it may be worthwhile. So take a look at that as well. So we also have questions about rehiring employees. We've run into this quite a bit. You can rehire your employees, obviously, but if you can't rehire your employees, remember you can substitute that employee with somebody else, assuming somebody is available. The other thing that happens is if you can't hire somebody and you've offered them a job, you will not get penalized in this paperwork. But you want to document that you've offered somebody the job. You want to send it to them in writing. Our clients, we're advised them, send it certified mail, what the terms are of the job, and then they may not send you in writing back, but document that your employee has refused the job. Remember, if they refuse the job, technically they're no longer eligible for unemployment at that time. So that becomes their problem. But they may have reasons that are legitimate reasons on their behalf for not accepting the job. But you will not be penalized if you can't rehire that same employee. You can always, if you can, hire somebody else in that position. You'll still keep your FTEs, and maybe they're even about the same pay rate, so that may not hurt you. But if you can't replace that person for whatever reason, and you offer them the job and they refuse it, there is availability in the application form where you will not be penalized for that. So that's very helpful as well. The 8 or 24 weeks, what should you use? This is really a great question, and it's come up quite a few times, and it's actually been discussed here briefly. You want to apply as soon as possible. And I really do agree with that sentiment. If you are going to qualify, you want to get this past you. It's not going to do you any good to qualify in 24 weeks from now if you can get it out of your way. If you get it done and over with right now, you know it's done, you know it's past you, and that's kind of nice. Anything could happen with rules and regulations in 8, 10, 12, 20 weeks from now. We just don't know. They may work against you. Probably not, but there is the possibility if you wait too long. So there's a reason to go as soon as possible. The other thing is you could be in for other banking. You may be going to Michael to borrow more money. Well, it's going to be a lot easier when they're looking at your ratios to say that you don't have that loan and it has been forgiven. So that's not going to show as debt on your financial statements. So that's going to be important as well. So you want to try to clear up some of these things as much as possible. Using the rules that we know today, and if you qualify them, that's going to be great. You don't worry about those changes of rules. If you say, maybe I need to wait the 24 weeks, that's eligible for a lot of folks. You may have been closed for quite a few weeks. We know there's quite a few businesses that have been shut down either because of, let's say, restaurants and bars that have been closed for a while, but other businesses could have been in, let's say, a collateral framework where they've been closed effectively as well. The 24 weeks may come in handy for them. Maybe they can't get everybody back in 8 weeks. There just isn't business available for them, and they didn't want to come off unemployment. So using the 24 weeks may work better for some of those people because, as Steve had mentioned earlier, you really have that much longer to spend that money. So that's a nice thing about it. So as we consider some of those options, consider what is your business framework look like? Does it make sense to get that debt cleared up? You know where you're going to be. If you have that hanging over your head, it might make financial decisions more difficult for you. I've even had some people say it could impact ability for bankruptcy issues. I think that goes beyond the scope of this thing today. That would be a bankruptcy attorney question. But definitely, if you're thinking that you're going to have a lot of difficulty with it, you at least want to get this resolved with the the forgiveness of the matter and taking into account if you get it done quickly, you're better off doing it quickly. So once again, don't worry about it if you can't hire back same employees. Perhaps you can hire somebody else back overall. Another question we get quite often that's tax related, does the Act allow you to delay paying payroll taxes? You can actually delay paying payroll taxes up to the point where you have not had a forgiveness. So another reason to take a look at the 8 or 24 weeks. Now you can delay paying payroll taxes without a penalty up to the end of the year. So you want to consider, does that make the most sense? Remember, those payroll taxes under current rules aren't being forgiven. You're still going to pay them. So do you really want that just building and building and building? But you may want to do that because you need the cash flow today and you're going to be better off tomorrow or in a couple of weeks when things get going. So take a good hard look whether or not that makes sense. It is possible to delay those payroll taxes. You may want to consider it, but I don't recommend using that as an absolute, that's a guarantee you're going to want to take advantage of that. Knowing it's there is important. We do get a lot of questions, and we've been questioning this at the AICPA level. My fellow CPAs that are on this call will certainly know about this. The loan program, when it came out, the PP for forgiveness, said it will not be taxable. Anything that's forgiven will not be taxable, and everybody understood that clearly. But at the end of April, the IRS released Notice 2020-32 that said the same thing. The loan being forgiven will not be taxable. But it is the IRS's opinion right now that any expenses that you use to pay with that forgiven loan will not be deductible. So basically, it puts you right back in the same position. It really doesn't matter if the loan is forgiven or not. If you can't deduct the expenses, it kind of puts you in the same spot. This certainly goes against the intent of the law, and even when you read the relevant code sections, I understand how the IRS gets to that point, but I don't necessarily agree with the IRS positioning. They are actually on somewhat weak ground, and right now there truly is bipartisan legislation that's being sponsored by 5 different senators, including the Senate Finance Committee Chair, Chuck Grassley, to codify this, that the expenses will be deductible. So right now, if the loan is forgiven, that's not going to be taxable. If the IRS has a way and no changes are made in the law, the IRS would consider the expenses that you pay with the forgiven loan are not going to be deductible. That is not the intent of the law, and that's actually subject to debate anyway. You should have an in-depth conversation with your tax provider, sure you know what take you want to go with that, and how aggressive you want to be. But then again, we may get legislation in weeks or months, or maybe even in the beginning of next year, whether or not that issue will be handled. And another key concern that I've noticed when I've looked at the application form, the term rent has now been expanded in the application for forgiveness. The term rent has been expanded to include personal and real property. This opens the door to not just your office space, but it can open the door to any lease payments you're making on maybe office machinery, copiers, computers. You might even have lease payments on delivery vehicles or other business-related autos. So that would then open the door for more lease expenses that could be considered part of the program. And interestingly enough, covered utility payments include transportation. So if the vehicle leases are included, that would drive those delivery vehicles may also be a utility component. We're down about 15 minutes or so left in this, so I know we have a lot of questions that are coming through because I can see them there. So, Shelby?
Kev, you might want to
Yes,
turn on the video function so you can save some of your bandwidth, because I know we're going to need you and we've got an awful lot of questions coming up. Michelle, would you like to advance the slide? now I'd like to introduce my colleague, Mary Estelle Reichman, who is our advisor for business retention and expansion, as well as global markets. Just to give you a little bit of background about Mary, she actually worked for the federal government at the U.S. Trade Representative for over 30 years. So Mary's specialty was negotiating international trade agreements, but also navigating the labyrinth of legislation, regulations, and other things in the Washington environment. She also has experience as a commercial banker in Boston. So Mary has really been our point person in helping small businesses navigate this situation. So outside of your lender, outside of your CPA, and outside of the representatives at the Small Business Administration, Mary has been the hunter and gatherer of information, and no question is too small and no question is too simple, because we know that, between the Payroll Protection Program regulations, the EIDL program, the regulations regarding the phases of reopening and how you qualify, getting personal protection equipment, etc. There's no question that we aren't capable of handling, and Mary has really immersed herself in this program and is here to navigate and field your questions and also talk a little bit about the easy form. So Mary?
Thank you very much. My colleagues on this panel have certainly covered a lot. The easy form, we've put up some of the key elements. Michael went over these initially. If you're self-employed, an independent contractor, sole proprietor with no employees, use this form. And then the two latter categories are if you haven't reduced your salary or wages or hours calculating for your employees more than 25%. And then if you've been impacted by the regulations that reduce the level of activity at your business over time, you could possibly use this form also. I think that what's best that we can help people understanding this form is to go in some of the questions that have come in. A couple of them focus on the first element. So I looked at Kevin and Michael, if you've got some clarifications. The issues come up with if you're in the first category and you use 100% of your PPP for salaries, such as a real estate broker, they're a sole self-employed, and so they're the only employee of the company. And then there's an independent contractor's asking, it's his salary, 100% of his salary. How does he ensure that his PPP is forgiven 100% when all he has is salary for himself? So it focuses on explaining how you use category 1 in order to maximize forgiveness, the total forgiveness of your loan. So, Michael, can you clarify how you understand the category 1 works with independent contractors?
Yeah, so the way that would work is you need to be within that $100,000 annualized salary during the covered period. So you follow that calculation. But the beauty of it is it allows you to use the easy form. And when you open the easy form, you'll see it prompts you with the calculations of how you get there, and it's just less steps. So I think I would say that you need to be within that $100,000 annualized salary, and the number of steps in the calculation just are much easier. This short form, really, that's the primary difference, is that you're not sending as much supporting documentation, and the calculation is less rigorous than the long form.
Also related to these forms are what payroll costs are eligible to be included. I think we've alluded to some of that, Kevin. Can you elaborate on payroll costs and what can be included in either the easy form or the long application?
Certainly, payroll costs, first of all, if you're self-employed and you have no employees, you don't have a payroll cost per se. It would be based on what your self-employed wages were in the prior year, and as Michael was mentioning, up to that $100,000 threshold. But if you do have your traditional employees and you issue W-2s at the end of the year, your payroll costs includes all sorts of compensation, but they have to be U.S.-based employees, first of all. That's really important because the Act expressly prohibits paying with the program people outside the United States. So with that, we have compensation, hourly compensation, salary compensation, cash tips, bonuses if they're normal course of business. You have payment for vacation, sick leave, quite a few other items can really go in there. So it's really quite generous. Also in that sort of thing is going to be group health insurance coverage as well is going to be included in that, and some local taxes. What is not also included are federal payroll taxes. They're not included. Now the taxes you withhold from your employee, let's say their wages, they're part of the total wages, but your match of FICA tax is not included. So it's really everything you're paying your employee will be on their W-2, and health insurance premiums and retirement plan contributions as well during this period of time can be included.
We also we have a question from Lynn about payroll service fees being considered part of payroll expense.
I don't think that payroll service fees are part of payroll expense, no. They're just administrative expense of doing business.
Okay. In addition to the nuances for the third category, these are the ones that have not been able to operate at a certain level of doing business before February 15th. Michael, we've gotten some questions about, you gave the example of a restaurant not opening. We were asked that could you elaborate on that example that you gave? How does a restaurant use the easy form under what conditions if they are to fall into this category 3? So you piqued the curiosity of a few of our listeners with your example.
Yeah, and I think, again, the key here is it's not changing the eligibility rules. It's simply changing the length of the form, the application form. So with restaurants and other retail businesses, we know how they were impacted and they couldn't bring people back. Many restaurants actually held off bringing people back. So although they might have been, they were being paid, they weren't able to bring them back for the dining in person. So my reference here is saying that that example would be one of the easy form eligibility items that would allow you to use that form as opposed to going through the long form. So it's not going to change the calculation. It just automatically defaults you to the simpler form. There's less supporting documentation. I think if you looked at the two forms side by side and went through them, everyone would want to use the easy form if they could. Only these three eligibility circumstances exist.
We have other questions about when can we apply? Forgiveness period, there are some borrowers that are at 8 weeks. Can they walk into Adirondack Trust and apply?
I can tell you that we have people that already are applying. So the answer is, going back to what we talked about, you have a 24-week forgiveness covered period, but if you're able to maximize your forgiveness at any point within that 24-week period, recall it originally started as 8 weeks, I would strongly encourage people to apply. It, as Kevin said, it avoids things changing with the guidance from the SBA. And the sooner you're able to unload your obligation with the PPP loan, I would think everybody would want to do that. So those people who funded their loans early on and have maximized what they believe to be their forgiveness, I would say apply now. You'll apply through your lender. We'll review that. Every bank will review it. If you haven't maximized the forgiveness yet, if you think you did, but your bank thinks you have not, there'll be a conversation, and you might then elect to defer another couple of weeks to be able to maximize that forgiveness. So I think it's important to make sure your lender, of course, during this process, you may think you've qualified for X. Your lender will sign off on that. If you haven't yet, that 24-week period gives you more time to do so. But apply now if you think you have satisfied the entirety of the forgiveness amount.
Well, that brings us to another, well, there's several iterations of this question. If you file forgiveness now and the regulations change, will the changes apply to you? What I've seen so far, the changes have in fact that come from Congress or even Treasury and SBA have actually predominantly been in the favor of the borrower. They've been relaxing conditions. So if you've applied for forgiveness, their question is, what will happen if regulations change?
And I think the answer is it's difficult to say. Here's what we know. Yes, the changes in guidance have benefited the borrowers, but I would say when you apply and your forgiveness is processed, until we're told otherwise, it's based on the conditions at that time. Now, if those conditions change and become more or less favorable, would that mean that you'd go back and change that calculation? I honestly don't know. I don't think anybody can say at this point. But I would say where we are today, where with Steve started with those changes that are all enhancements, I think right now, if you've maximized your amount of forgiveness, there's no reason not to apply now. I think you should apply now. You should not wait.
We have two other questions that fall into the category of forgivable expenses. For example, one participant is saying that they were initially advised that a home office should not be considered as rent. Has anything changed on this? And then the other question on forgivable expenses, can they expense PPEs? That's really relevant today. So home office and personal protection equipment as expenses. If one or both of you, Kevin or Michael, if you want to elaborate on that, what you know.
I would say home office is not rent. You're not paying rent to it. But when you go through the home office expense calculation, there could be some mortgage interest in there. So potentially you could get that percentage of mortgage interest there, but that'd be fairly minor, but you're not paying rent. You would have had to have a rental agreement prior to February 15th. Since you didn't have a rental agreement, you can't just all of a sudden make rent expense now. So I'm going to say that's no. PPP is an administrative expense, and I don't see where that fits into any sort of compensation. Or how that would be otherwise deductible as a utility cost or something else of that nature. I also know there was another question there. Somebody asked about workers' comp insurance. That's not the same as health insurance. So I believe that is not included in, compensation as well.
We also have a question about if you were given an EIDL advance for employees, does this need to be deducted from the possible forgiveness amount in the PPP?
And Mary, I could say the $10,000 advance was rolled into PPP loans that were granted, that was rolled into them. So it's part of the PPP loan. We didn't, of all the applications we processed, there were very few that had that advance amount, but I would say that's all part of the PPP loan that gets forgiven.
Yeah, I would just want to follow up on that. That has been an ongoing question, and different lenders have handled that differently. We do know some lenders, if they were aware that a PPP borrower had received an economic injury disaster loan advance, they were automatically deducting that amount from the PPP proceeds before they sent it out. Most banks did not do that, most lenders. So the bottom line is, as Mike said, yes, the PPP advance will have to be deducted from the total PPP, the idle advance will have to be deducted from the total PPP calculation. But you want to make sure and get with your lender on that because different lenders have handled that differently.
Thank you very much for that elaboration. Kevin, we've got a question specifically aimed at you from Jane. So once the loan is forgiven, how are the funds categorized on the business's financial statements? Is it income? Is it capital? What are they supposed to do after this period's over?
If you're talking about like QuickBooks or something of that nature, I'd put it into other income, but on their tax return, it's going to not show as other income, depending on their form of doing business is how they're going to handle on their return. If they're partnership or a corporation, that would probably be on their M1 schedule, other income on books not taxed. If they're filing a Schedule C, it wouldn't even appear anywhere on the tax return at all.
I have a final question, I think, because we're nearing the hour. If you apply for forgiveness and it's determined that you do not qualify for 100% forgiveness, will you have an opportunity to appeal that determination? So say you ask for 100%, but you're not granted the full 100% forgiveness. Is there going to be an appeal process for them to ask someone that question?
Yeah, that's a good one. I think we're waiting on final guidance. I think there will be a way to do that, but really, because of the way the program is set up, the lender has to agree with has to really agree with the borrower's submission that they are eligible. SBA is really not going to be making that decision. It's due to the delegated authority we've given to the lenders. They're going to be, signing off on that or whatever part of forgiveness. You can qualify for partial forgiveness if you don't hit all the right numbers on it. But that determination, the way I understand it now, will be made by the lender, and then the lender then submits that to SBA for full or partial forgiveness. Mike, is that how you understand it?
Yeah, and I would parlay on that, Steve, yes. But the reason why I'm encouraging PPP recipients to apply sooner than later, if people wait too long and they wait until 10 months after the covered period, that following month, you're going to start paying principal and interest based on your loan amount over a short period of time until maturity. So you'll have a significant loan payment if you wait too long and there's not time to process the forgiveness. I don't think anybody wants that, the borrower, the bank, or the SBA. So that would be sort of my, reiteration of apply when you think you're ready, sooner versus later. And it will give us also the opportunity to communicate on what we think your forgiveness is versus what the borrower may think, and have that conversation.
We actually have one question about applying for a new PPP. If you are a landlord and receive rents but have no payroll except for the draw the owner takes, can you submit a PPP application? Obviously before June 30th.
I don't believe so. I don't believe landlords are, well, I don't want to, this has been a back and forth question for a while now, but my understanding is if you're just a landlord and you're collecting rents, then I do not believe you're eligible for the program. However, I will defer to Mike and Kevin because I am, I've heard both sides of this, and I'm just wondering what they're seeing or hearing on your end.
Yeah, the other side, Steve, would be if you have a landlord, but they do have certain W-2 employees,
right?
They're not contracting out for landscaping and everything else. If you have an office person, W-2 employees, then in that case, that would be something that would be, considered, but certainly not your independent contractors. And for the most part, landlords don't have a lot of employees just by nature of the business, but they do have some administrative support. So there is some of that.
In my hunting and gathering of information, the New York Forward Loan Program is available for individuals who have not received a PPP, but who are landlords. So please, whoever submitted this question, it's come in as anonymous, please call us. We can find out more information and help you through that new New York State program. I can't tell whether you're in state or out of state, but there are new funds available from the state that are aimed at some landlords that have not received PPPs.
Okay. Thank you, everyone. Thank you so much. What I would like to do now is give all of our panelists an opportunity to just communicate some final thoughts. And Kevin, can I start with you first?
Sure. I just want to thank everybody for attending, and hopefully we've answered all your questions. And just as I mentioned earlier, just keep in mind that these things change very quickly, and the Prosperity Partnership will continue to get information out there as best as we can. So just stay tuned.
Thank you. Michael, would you like to add any final thoughts?
I would just say on behalf of not only Adirondack Trust, but all the banks that, we're here to help. And I think we all want to do it sooner than later. So if that's sort of the mindset that we try to do it as soon as we can, I think we all win.
Okay. And Steve?
Yeah, thanks to the whole team here. Great job. And remember, the program is open for a few more days, but stay tuned. There could be additional, I believe there will be additional money flowing from the federal government over the rest of this year to small businesses who have been impacted. So stay tuned. I'm sure SCPP, Adirondack Trust, and Kevin will be able to really help as those programs move forward too.
Excellent, excellent. Well, thank you so much. I think, we've all communicated that ultimately we are here to help you through this process. As small business owners, you do what you do well, and navigating a system of, federal relief packages might not necessarily be your forte. So you're not alone in this process. Just for quick reference and housekeeping, we did put up some useful websites, which is a link to the U.S. Small Business Administration, which is sba.gov. Right on the landing page, there is, COVID resources, and it will bring you to all of these resources that we have here. U.S. Treasury, which makes the rules for the program, is also here. It's treasury.gov, and really right at the masthead, you'll see COVID resources. We also, the Saratoga Partnership has a COVID resource page that, you can work through, but sometimes doing the research on your own can be a little arduous, a little complicated. So right at the bottom, we have our phone number here, which is 518-871-1887. And, our team is here to help you, but especially Mary Estelle Reichman is our point person right now, who is doing outreach. So if she calls you, please answer, because she's reaching out to businesses throughout Saratoga County to see how you're doing. And she is also a resource. So it doesn't matter if it's regarding the payroll protection program, the EIDL program, New York State regulations, even local regulations in your community. If you have a challenge, we're here to help you navigate through this. So that's all we have for today, but thank you so much. If you have any questions or lingering questions, we're all here. So please email them to us or feel free to give us a call. And, we still connect with our team here of panelists so we can try to answer those questions for you. But again, thank you so much, and we hope you have a great day.
Thank you.
Take care.
Thank you.